All right, folks, welcome to Investing for Beginners podcast. Today we have our friend Brett Schafer back, and today we're going to talk about Remitly versus Wise, the two remittance giants. And we thought we would discuss the companies, their strengths, their weaknesses, how they compete, and maybe some competitors against them and whatnot. So, this is one of Brett's largest positions in his portfolio. I, for full disclosure, do not own either of the companies, but am intrigued beyond belief because, of course, I'm a payments geek. So there we go. With that, Brett, thanks for coming back to the show again from Chit Chat Stocks, and let's talk about Wise and Relent.
Yeah, let's do it. As a disclosure, Remitly is a stock that I hold in my portfolio. Wise, I don't, but I like both businesses. And if you look at your favorite uh, financial data provider of choice, such as Fiscal AI, which I have loaded up right here, the growth rates of these businesses from both payment volume adoption, revenue, and now increasing earnings power should get you excited to research why these businesses are growing so quickly, why they're taking market share, and whether they could be good stocks to own in your portfolio.
Oh, yeah, that's great. So who are they taking market share from? Let's start with that.
Okay, well, Remitly and Wise are a little bit different. So, Wise is digital only remittances. And for anyone that doesn't know the terminology, remittances just means cross border transfers. So, for example, you are someone from the United States and you want to send money to someone in Europe, in France. Wise easily enables you to do that for a fee. Now, Remitly is also a remittance provider, but unlike Wise, Remitly is so from the sending person, they are digital only, so mainly from a smartphone or from your computer, but they do digital receiving or physical receiving, which is popular in lower income countries that they target, such as Mexico, India, stuff like that, where many of the people there still want physical cash payouts from their local banking or financial services provider. Now, who are they taking market share from? With Remitly, it's much easier to understand. They are taking market share from the traditional legacy players such as Western Union, MoneyGram, and then there's also some such as PayPal that actually have high fee international transfer services. And one interesting thing you can do is look at Western Union versus Remitly's either revenue or payment volume. I don't know if Western Union discloses this, so you can use revenue, but their payment volume from North America or revenue from North America has been converging, where Western Union's is declining and Remitly's is rising. So there's a lot of market share getting taken there. Now, Wise is more of a European player. They're a United Kingdom company. It started by, I think, two Estonian guys, at least one Estonian that was living in the United Kingdom. That was the inspiration for starting the business. And they're more, say, higher income, not necessarily some worker that is living in, for example, the United States, sending money back to Mexico, Colombia, or India, but someone that's living in another country, wants to spend in another country or send money to themselves, business partners, stuff like that, digitally only. And they're disrupting, I think, more of the traditional banking system for international money transfers, which are extremely high fee. Also, services such as PayPal, kind of the legacy digital players, and they're trying to reduce fees for customers. That's their bread and butter. Now, Remitly focuses more on servicing the remittance core customer, like a worker, technology worker sending money back to Asia or something like that. Where Wise is going for reducing fees as much as possible for those digitally native customers and trying to get them to switch from the traditional banking services to Wise. And there are many more products that they're working on to try to build each of them financial services ecosystems for international payments. But I think that's where we should start and why these companies have grown in the last decade.
Yeah, they've grown quite quickly. It's been pretty amazing to see the growth for both businesses. I guess a question that I have about both of them is Wise is definitely going after the banking segment. For somebody who worked in the banking industry, I know wires wire transfers very intimately. I became the wire guy at the branch that I worked at because I was lucky enough to successfully complete a lot of them. And so I got the joy of having to, hey, you got to do a wire, go talk to Dave. And they were lots of fun, but they are slow and very, very expensive. And so Wise has definitely gone after that segment. I'm curious how Remitly has gone after more of the physical. You mentioned that, like the actual taking of money. Is that something they are kind of focusing on?
So, and you mean like disbursements in
Yeah.
the
Yeah.
the,
So,
the
like,
receiving
perfect
country?
example is, a worker here sends money to India. And
Mhm.
so the person in India can physically take out the cash. Where Wise, they don't do that. But with Remitly, they can do that.
Yes, exactly. So Remitly's targeting those customers. They market specifically in the United States on billboards and areas where these communities are congregated, and they try to get, say, technology workers, agricultural workers, construction workers that want to send money back to these home countries, and they essentially want to replicate the payout network that Western Union has through banking partners in all of these countries. I don't have the stats in front of me, but I think they have hundreds of thousands of payout partners. One example they like to give is that even in a place like the Dominican Republic, where I think maybe for safety issues, I'm not sure exactly why they have this in that country, but there's home delivery for remittances. Maybe I'm not sure why it's there, but Remitly was, smart enough or wanted to invest to replicate that product from competitors to offer that to the receiving customer. So they essentially want to replicate what Western Union has. They're going to have lower fees than them, and that's going to convince the sender from, say, the United States, Canada, or what have you. Could be any country sending. It could be reverse. It could be someone sending from Brazil to the United States, something like that. They want to replicate that with lower fees to convince people to switch. Now, they're not going to have, on the whole, as low of fees as Wise because Wise doesn't have to deal with physical payouts, and that's always going to come with higher costs. But Remitly is going to have better fees, really easy to use mobile app, and that's why they've been stealing market share from the likes of Western Union, and I think probably can for at least the next 5 to 10 years.
Yeah. So, for sure. I'm curious how Remitly's tech works in that how does the money how does the money exchange hands? So if I send money to you in Brazil, how does that process work? I can explain it for Wise, but I'm not sure how it works with Remitly.
Well, why don't you explain it for Wise? And I can maybe just say before you do that Remitly, I believe, and they don't fully disclose this to investors. It's kind of trying to read through the tea leaves a little bit. I think they are trying to replicate what Wise does, but they're not entirely there today. That's one advantage Wise has is from the digital infrastructure and payout perspective. They are, at least today, superior than Remitly, and Remitly's trying to catch up to them with that.
Okay. All right. So from all my research and trying to, and I've had AI kind of dumb it down for me a little bit so I could kind of understand it. So the easiest way that I can explain it is, let's say that I'm sending money to Brett and Brett is in Brazil. The money would be, and I'm doing it over the Wise platform. What would happen is Wise would take $100 out of my Wise account, whatever I have connected. If I have a bank account or if I have a card with Wise, they would take $100 out of my account. They would put it in their local bank here in the United States. In Brazil, they would send an electronic message to a regional bank wherever Brett was located that he would be banking at, and they would basically send a message saying, take $100 worth of reais out of Brett's, out of this account and deposit it into Brett's account. This all happens very quickly in seconds. In some cases, 5 to 10 seconds. It can be very, very fast. So the money doesn't actually cross the border between the United States and Brazil until a later date. So the way the system works is it takes the money from me and it takes the money from and puts it in their account here. It takes the money from an account in Brazil and gives it to Brett. So the money doesn't actually exchange hands at this point. Later on, either through the Swift system or other systems, they will do a ledger balance where they will do a bulk amount of money from the United States to Brazil and then withdraw money from Brazil and send it here to the United States so that everything would balance. And so that's how they choose to send money throughout the world, and that's how they do it. Now the difference is, again, it goes directly to the account, so there's not actual cash that is sent to Brent, but he has the $100 in Hey Ice in his account that he can use however he wishes to pay for it.
Yep, that if, I believe Remitly, and again, it's hard to get the nitty gritty in all this payments infrastructure. I'm not sure an
Mm.
investor needs to understand every little thing that goes on, but essentially, I think that is what they're doing. And when it's digital, it's much, much easier to do that. And over time, I think part of the maybe concern some investors have with Remitly is that over time, you would expect payouts to go fully digital, but from what they're doing and working on, it seems like they understand this. I would believe that the management team, the founder, all the employees really understand that, and they are working to replicate a lot of Wise's products to try to become more like them in the future. And these products are, much much earlier. Wise is a lot more experience in them with them, but that's one way they're going to try to do that. And if you remember the famous quote where Netflix has to become more like HBO before HBO tries to become more like Netflix. I think that originally it was, Wise wanted to become more like the banks and Remitly wanted to become more like Western Union, at least from a services perspective, but with lower fees. But now Remitly and Wise are going to be trying to do the same thing with each other, where I think Wise is going to be trying to maybe be a little bit more like Remitly, but Remitly is definitely going to try to replicate some of these things that Wise has. And when you talk about funding, we're going to mention stablecoins, but on the recent conference call, Remitly talked about how let's see, I have it pulled up here. So when they put, say, integrating USDC stablecoins on their balance sheet, it can really help fund, again, the liquidity you talked about in global markets. You can have, as they say here, and this is a quote, near instant settlement across time zones and weekends, which will enable quicker transaction processing, greater reliability, and lower cost when customers send money with us. So, as Dave talked about, they don't necessarily send money every time. You just need to have funding sources in every country related to what the trends are on, there's on average this amount of money sent in this direction, from Mexico to Canada or to the United States to Mexico over these hours, over these weeks. And we just need to have funding there that will reduce our costs and help us charge lower fees to customers while still generating a profit.
Exactly. So let's talk about the growth. Like what kinds of growth are we seeing from these businesses?
I'll pull it up right now. If we look at Remitly's revenue, which should track pretty much with payment volume growth and actually grows slower because they're trying to bring down their take rates over time. They have grown from in 2019, $127 million in revenue to about just a tad under $1.5 billion over the last 12 months. So they've gained a tremendous amount of market share. Now, gross profit has grown even faster because their costs have come down as they've tried to replicate some of Wise's funding there. So that's grown from 70 million to just under $1 billion. And if we look at Wise, it's been a similar story. I'll pull up the numbers in front of me right now. So if we look at their total revenue, they go back a little bit farther, I think because they went public earlier. In 2016, they only did $28 million, or actually, sorry, that's pounds, 28 million pounds of revenue. And over the last 12 months, which I guess ends March 2025 is their latest update, 1.6 billion pounds. So they're similar sized revenue businesses today. I think they both have, and they target slightly different markets. This is a Venn diagram of overlapping customers. They definitely have specific customers that they target that the other one doesn't. But they have, if you're going to talk the entire money transfer business across borders, whether individuals, businesses, whatever, they both have similar levels of market share. And from what they share and their estimates, it's about 3%, maybe pushing 4% now, given their recent growth each. So combined, they're still under 10%, and that should give them a lot of runway to grow going forward.
Yeah, for sure. For sure. So I was reading Morningstar's report about Wise yesterday. And I'm curious what your thoughts are on Remitly. Their take was that at this point, they didn't really feel like Wise really had a moat or much of a moat. What do you think about Remitly in that regard?
I think in the classical sense, maybe the Morningstar definition sense, you would argue today they don't have like a wide moat, but I see ways to that you could have an emerging moat. For example, you're not going to have, I guess, the branding maybe matters a little bit because you do have to trust your international remittance provider. You're going to send $1,000 back home. You need to definitely trust who you're dealing with. But I kind of disagree because, one, I think with remittances, there is the ability to build up a network effect where you have to get, and this is underappreciated because there's 200 countries around the world, or give or take 200 countries. And it's not that you have to get enabled to send in 200 countries. You have to have the ability to send from one country to 199, and then the second country to 199, and that is many, many more corridors, as they say, than you would think, and it takes tons of years to build up, get the regulatory licenses, all of that. So I think there's a network effect in that regard. There's also maybe even more with Remitly than Wise because they're digital only. The payout infrastructure is something you can't replicate overnight. But with Wise and Remitly in general, I do think there are economies of scale. As you get larger, you have a bigger balance sheet, which can help more cheaply fund payouts and what have you, all the services you're providing at a lower cost. That allows you to have lower fees than the competition, which convinces customers to stay. And then the cycle repeats over where more customers are staying, you get larger, you reduce your cost, you add more services. I kind of think there are emerging moats here. And maybe more importantly today, though, is the counter positioning versus the existing banks. Western Union cannot, and this is maybe speaking more with Remitly, Western Union is not going to be able to get rid of their physical branches overnight. They definitely have technology debt. They can't replicate what Remitly has unless they try to totally disrupt their entire business. And that's just a classic innovator's dilemma. Now, with Wise, you have the banks that charge what, maybe $50 flat fee for a wire transfer, give you a bad rate. That is another level of innovator's dilemma that I think Wise has taken advantage of for years and years and years. So if they don't have a wide moat, according to Morningstar, I think that's okay because the historical, say, situation within the remittance business that has allowed both of these companies to gain market share, I see no signs of that stopping over the next 5 or 10 years, which should help them keep growing uh, payment volume, revenue, and hopefully profits.
Yeah, I would agree with that. Yeah, I think that's a really smart way to look at it. I didn't agree with Morningstar report. I thought it was a little narrow minded, and so I agree with what you're saying. I'd like to talk a little bit about the cost aspect of what both companies are really trying to do, and maybe you could talk about kind of the cost or the take rate versus the volume and how that's really playing into to both companies' success in the future now and in the future.
Well, when you look at both companies' conference calls or investor presentations, and this is why specifically they discuss their take rate, and maybe bring it up in the segment and KPIs on, yeah, okay, great. They have it on fiscal AI. They have the take rate from the company. Yeah, let me just do quarterly. So when they're talking with investors, when they're talking about bragging about their products, what have you, they always are trying to say that we're reducing our costs and then we're going to pass on these fees to customers. And I think as they keep lowering their costs, they are going to widen their competitive position versus any sort of, now this is not necessarily because they already have a better value proposition versus the banks. This is maybe more versus, say, another digitally native remittance provider, someone that is trying to copy Wise, that can give them an advantage versus that company. And then Remitly is similar. They say they want to provide the best fee for their services, and that has come down over time. And one way you can track it is if payment volume is growing slower than revenue. So if we look at, we'll go to Wise first. Total cross-border revenue has grown at, oh wait, yeah, total cross-border revenue has grown at a 13% year-over-year rate since June of 2022. And if we look at total, let's see, total volume, it's grown at a 27% rate. So they are reducing their fees a lot and they're making more money. And this is a little bit different than Remitly. This is part of the stuff that Remitly is trying to um, copy, I would say, over the next 5 to 10 years. Wise has a lot more services that they can make money on, such as the business bank accounts with the high yield savings, why can't I think of the name? The debit card. They're launching card services, spending services. So not only sending money to someone else, they want to allow you to store and spend money. So that's kind of the three-legged pillar and or three-legged stool, and that is another way for them to make money while reducing the fees, but also, having revenue earning potential from these customers. And if we look at, I don't think I need to pull up the numbers directly here, but Remitly's send volume has grown consistently faster than their revenue, which means that their take rate is going down and down and down. That means their fees to their customers keep going down and down and down. But at the same time, their gross margins are expanding. So that shows that at greater scale, they're able to either A, negotiate better rates with regulators, clean up their transfer processes, just get more efficient and efficient every quarter with their payment infrastructure. And that I think that should only continue.
Yeah, I 100% agree with your analysis there. I think one of the things that makes both of these companies stand out, it reminds me a little bit of Adyen, the payments company from the Netherlands, where they are constantly trying to lower their costs, which they think will attract more and more customers and bigger customers. And as they can get a bigger volume, they can reduce their rates even more, but remain profitable and grow the profits because they can use that operating leverage that they generate to make more and more profits, and it becomes a nice little flywheel for them. And so that's one of the things that attracted me about Wise, and I wasn't aware that Remitly was doing the exact same thing. So that to me is very, very attractive.
Yeah, and with Remitly, I don't think they have the exact same infrastructure as Wise today, but again, and this is some of the bear case that I've read before,
Mm.
they are trying to replicate some of what Wise has done for digitally first sending. And I also think the Adyen comparison works for the innovator's dilemma and technological or just basically product expertise, where Remitly Wise, they started from scratch, they built a better product for mobile smartphones, easier to understand, and compared to the legacy players, it's so much easier. For example, if like this happened in my personal life, my friend was trying to convert money to yen for a trip to Japan, and through his legacy, I always say legacy, but just one of the big banks in the United States, it was going to be a complicated service. You probably had to call the customer support rep. You couldn't really find what to do on the mobile application. It was going to cost $50 flat, which was going to be a huge fee for the amount of money that he wanted on the trip. But if you open Wise, you can fund it very easily. It takes a little bit of time because you have to go through their security protocols. They're trying to reduce fraud and stuff like that. But you can easily see on the mobile application what your rate is, what currency conversion level they're using, from say that one currency to the other. And you can see upfront what the fee is going to be, and it's generally going to be the cheapest out there. So that's something that the banks either don't want to or can't replicate because of their old solutions. And I just think that gives Wise a huge advantage over that.
Yeah, that's true. Very true. So we've been I think fairly bullish on the businesses so far. If you had to cover what could go wrong, like where could investments in these companies go bad?
So first with Wise, I think There are some neobanks that could potentially replicate some of their services. For example, you have, and I know they don't play in the same exact markets, but I think they actually partner with each other as Nubank.
Mhm.
Um, there's, people talk about how there's going to be, I don't know, those ones, Revolut or
Yep.
SoFi or what have you, that really offer great mobile applications, good products for customers, and they can have so much more of like the core personal finance app for an individual that if they added these international transfer services, maybe they would be able to take, market share back from Wise because if someone can, they're just going to use one mobile application versus another. But I think one way Wise is trying to counterposition for this or prepare for this is, and I forget what it's called. It might be called the Wise platform. They changed their name a lot, where they are actually the ones powering the international money transfers for a company like Nubank or a company like Revolut. And that allows them to, one, earn money from that, get greater scale, and make a friend out of a potential enemy. So I think they're doing quite well for that. For Remitly, it's a little bit different, and I guess one of these is also possibly applies this to Wise. There's one a stablecoin fear, which maybe we can talk about a specific section. But with Remitly, and this is why I think the stock has fallen this year, is there's remittance outflows, worries from the immigration crackdown in the United States and kind of the anti-globalization narrative around the world. That hasn't shown up in their numbers yet, but I think that is the biggest fear for Remitly. And then maybe comparing the two, one thing I see from investors that kind of get fearful about Remitly and like Wise much more is that Remitly has higher fees on average than Wise. But I think when you understand that Remitly has the physical payouts, you see that that's not really an apples to apples comparison. So there are some things to worry about. But on the whole, I think both companies are dealing with them fine, and that the fact that they're gaining market share can help with any macroeconomic headwinds. And as we maybe discuss in a later section on this podcast, the stablecoin initiative actually might, or sorry, not initiative, the potential growth in stablecoins, which I don't know what the numbers are yet, but there's a whole narrative in the investing world about stablecoin disruption for all sorts of payments. If that occurs, actually, I think it can help Remitly and Wise and not hurt them.
I would agree. All right. So, one other thing I guess I would throw out there about Wise, this is, I think, more specific to them, is one of their, I guess, revenue streams is the money that you mentioned that they hold in people's accounts. They they charge interest rates. So they because the rates here in the United States are normalized at the moment and are higher than they've been over the last few years. They're generating a little more income from that than they normally would. And so there are concerns that if, the rates do fall, that could impact some of the growth of the business. But at this point, it's not a huge amount of revenue for the business. But as the company continues to push their cards and the bank part of the bank, it's not a bank, but the savings part of Wise, as those deposits grow, in theory, so should the interest rate that they earn on those savings accounts. And that could be a potential headwind if rates ever do change. So that's something definitely to keep an eye on as you look at a company like Wise over the years. It's something I wouldn't say it's like a death knell, but it's definitely something that could impact some of the growth of the business.
Right. Yeah, because that's gone from close to zero to
Hmm.
over 500 million pounds in the
Right.
last 12 months. So
Yeah.
it's been a
So it's,
huge profit driver for them. They do break it out on their earnings that they kind of separate what the core profitability is and then they add back the net
mhm.
interest income. I think that, you know, on the one hand, yes, people are worried about interest rates being lowered. I'm not sure if they will. I think that's extremely hard to predict, if not impossible. But in general, the fact that they can invest the quote unquote float or what they hold on the balance sheet is a long term advantage
Mhm.
and an attractive part of the business model.
Yeah, for sure, for sure. All right, so we've teased a whole bunch about the stablecoin thing. Let's talk about that. How is this? how could this potentially impact both companies? Is a good thing, bad thing? What are your thoughts?
Well, let's start with the narrative around stablecoins, and maybe we'll describe what they are first. So, stablecoins are a cryptocurrency that's tied to the value of fiat currency. So, if you have one USDC, which is the one from Circle, it is, you know, if you have put $1 in, you get $1 worth of USDC, and it should track the value of the US dollar. So, at least compared to other currencies and stuff like that. So if you deposit it and you have one USDC, 3 months later, you should be able to withdraw $1. Now, the narrative around payments, and this applies to not just Wise, Remitly, Western Union, and the international money transfer business, but it also has been applied from a narrative perspective to payment processors, Visa and MasterCard, anyone within the payments ecosystem. There is a thought that stablecoins are going to eliminate fees for money transfers. It's going to be either free or extremely low cost. And that is going to kill these businesses, right? Because Wise and Remitly, their bread and butter is earning a small take rate in international money transfers. And if that goes away, your revenue goes away and you're in big, big trouble. What I think the narrative misses, though, is that stablecoins can exist, but you have to think about what they call on ramp and off ramp. And to illustrate, maybe we can go through an example of why someone is using Remitly or Wise to send money to another country. So you have, say, US dollars, and then you're trying to get to your family member in Mexico to have Mexican pesos that they can spend on their daily goods, save up. Maybe they have a healthcare expense, something that you're sending money back for, whatever the reason is. You have to start with US dollars in the United States, and you want to get to Mexican pesos in Mexico. Now, it doesn't matter if you are funding your Remitly account or funding the money transfer with US dollars or USDC, but eventually, once you get to that point in the transfer cycle, you have to, because let's say the local taqueria or grocery store or Walmex, they don't accept USDC as a form of payment. You have to convert to pesos in the local bank account. Now, that's where the fees come in, and that's where the costs come in, and it's not going to be free. So even if stablecoins are used, it's not going to eliminate these fees that people have to pay, or excuse me, that Remitly has to pay and then passes on to their customers. And it actually will be, I believe, an advantage over the Western Unions of the world, because stablecoins can be used, as we talked about earlier, to manage their balance sheet better for off-hour transfers. And if you want to fund your account, they've already announced that. I think it's not out today, but maybe it's coming out in a month. They were discussing it on the conference call. That was a couple weeks ago. They are already allowing people to use USDC as a funding source and as a way to pay out. But again, the fees aren't going to go away, because eventually people want to spend in the country or the currency that you can actually use for spending what you want to use with your money in these home markets.
Yeah, and I think the other thing about the whole on ramp, off ramp part of it, and you mentioned as we were talking off air about this, is that it feels like everybody's talking about the potential disruption, but they're not talking about that very important piece of the on ramp, off ramp part of it, which in a lot of places they don't have the technology yet to off ramp something. So let's say it's coming from the United States and we have better technology and it's going to some very, very small town in the middle of nowhere, Brazil. They most likely will not have the technology or the ability to convert that USDC into a local currency, the reais or whatever. If they're in a border of Uruguay, then they may have a different issue changing that currency, and so that could present a problem. And the other part of it too is the whole goal of Wise, and it appears Remitly, is to lower the costs to attract more people. And so if something like stablecoins helps lower the cost of making the transfers. I'm not talking about the actual conversion to currency, but the actual transfer itself. I think they're going to be all for it. Visa and MasterCard are embracing this wholeheartedly because if it makes things cheaper, it makes business better for them and they're all for it. So I think it feels like the off ramp part of it is something that I don't think it's talked about quite enough yet. And the technology doesn't feel like it's quite there yet because, to your point, not every place will accept USDC. I would be hard pressed here in the United States to figure out where I could use USDC to pay for something. I'm sure it's possible, but in my ignorance, I don't know. So I think there's a lot of fears about what could potentially happen as opposed to what will happen.
Oh, exactly, exactly. And when you look at the stable coins, you have to, they not only need to be accepted to just be used, quote unquote, of, oh, I can convert to a stable coin. Yes, sure, now you can buy a bunch of cryptocurrencies with that. But with these businesses, they're trying to operate in the physical world, buying goods around the globe, and you're not going to replicate the acceptance of Visa or MasterCard overnight. And if you can't, or you need to get to physical currency, there's still going to be fees. No one in this entire value chain, whether it's Remitly, Wise, the local banks, Visa, MasterCard, what have you, they are not going to do anything for free, or else they're just not going to perform the service. So regardless of its stable coins, USD or USDC, I think the more digital transfers grow, the more it benefits Remitly and Wise. And I really see no way for stablecoins in their current existence to totally disrupt these businesses within a decade. Yeah, I think that's it.
Yeah, no, I would agree with that. And I think the other thing that's not discussed too is the current system that we have allows for any ambiguities that may happen in the payment. So I'll give you an example. Years ago, when I was working in the bank, we did a wire transfer to Japan. Keep in mind, transfers are different anywhere you go, and wire transfers are a whole other beast. And but the point is that the customer gave us the wrong account information. So unfortunately, the money went to the wrong person's account. Now, kind of the way wire transfers work is, you track it from, your bank to an international bank to a transfer bank to the local bank in Japan, for example, but you still have visibility in the transfer. You see where the money goes, you see who sent it, you see who touched it, if you will, and where it landed. And so because of that, you have the ability to recall the transfer. You can ask for the money back, and in most cases you can get the money back. With the way that crypto and stable coins are set up, you don't have that ability. And so if a payment goes through or a transfer goes through and there's something wonky about it, let's say you put a 2 instead of a 1 for the last digit on the account. If it goes to a wrong account number, there's not a lot of ability to track that money and to get it back. And there's no way to dispute transfers or payments with those things as well, at least at this point. And so there is a certain trust factor that goes into using something like Wise or Remitly because you have faith, Western Union, the banks, you have faith when you use those things that when you send it, it's going to go where you want it to go. And if there is a problem, you have a way of rectifying the problem. With some of the things that are going on with stablecoins at this point, as we're talking, those things are not in place. And so there's going to be some problems, unfortunately. So there's going to be mistakes that are going to happen. And until that part of the process is really worked out, I'm worried that I fear that the total acceptance by the community, I think, will be less than I think what they're hoping for, just because of that kind of KYC part of the equation.
Oh yeah, and part of the reason the fees exist is to fund fraudulent transactions that not fund them, but basically pay for stuff that goes wrong or mistakes or essentially things that criminals stealing stuff, it's the same thing with credit cards and how, part of the fees get to funded there. Now, I will mention there is a distinct difference here, and I think this is again where Wise has the edge in part of their business over Remitly, where when Wise has been asked about stablecoins, they say, and because and you talked about that wire transfer process, they've totally eliminated the wire transfer process, and that's how their fees are so low. They think and believe right now that stablecoins do not offer them superior costs and therefore they're not going to use them. They said, look, we would use them if it reduces our costs, but right now we don't see any ways. They're exploring, they want to keep reducing their costs, but they don't see it. Now, Remitly has embraced stablecoins, and maybe that's because they are behind a bit in the payments infrastructure. And one thing I should mention is that Remitly, and this might weaken their potential moat versus the competition, they use what is called Visa Direct as a partner for real-time cross-border remittances to, say, debit cards. Now, that is something that Visa offers, and they can not only offer to Remitly, but anyone else. So I think Remitly is trying to build out their own infrastructure over time, but Wise, again, is probably ahead of the game in this regard. And, it's helpful to have a partner like Visa to onboard customers. They have stuff. I think this might be a little bit different. Again, it can get confusing with the payments infrastructure, but there's an integration that Remitly now has with WhatsApp where you can talk with, I think maybe even the Meta AI, but you can have a conversation with the bot. You can say, hey, look, I want to send the money here. What are your fees going to be? Here's the rate. Here's what it's going to end up in this person's account. So you have this partnership and you have all that stuff that can help drive growth. But again, back to the cost thing, Remitly is using stablecoins, I think because maybe their infrastructure is not as good as Wise's. And that's something to consider for investors. I don't think it makes Remitly a bad business. It's just Wise, from the infrastructure perspective, is superior. I'd almost consider them, maybe Remitly is the Stripe and Wise is the Adyen, especially because Wise and Adyen are, European versus Stripe and Remitly, West Coast, United States.
Yeah, yeah, I think that's a pretty good analogy. And I wouldn't consider them a worse business. It's just different, and they're using the tools that they have available to do what they need to do for their customers, and that's bottom line. That's really what matters the most. What What are your thoughts on the valuation of Remitly, and maybe just a overview of Wise?
So the reason I own Remitly and not Wise is because I think the valuation is significantly cheaper. Today, Remitly, and we just use for the podcast purposes market cap because enterprise value is a little less, but we'll keep it simple. So they have $3.9 billion market cap. Over the last 12 months, as I mentioned, about $1.5 billion in revenue. They are guiding, I think, for in between, and again, exact numbers aren't important here, but over 20% revenue this fiscal year. I think they can keep growing revenue at a pretty good clip. It's going to slow down at a larger number from a percentage basis, but I see no reason they can't get to $2 billion next year because they're going to do about 1.6 billion this year. I think they can get to 2 billion next year, and then within a few years, $3 billion in revenue. Now their gross profit margin is over 60%. And if we look at their cost, so say their cost of revenue is going to be all the payment stuff that they include, payouts to Visa Direct, what have you. Now below that you have R&D for product, and then marketing, and then general and overhead. Now they're getting leverage consistently on these costs. And general and overhead should, and it's a red flag if it doesn't, it should get a lot of leverage at scale. If it doesn't, that kind of means the business is probably spending willy-nilly on corporate stuff, offices, company retreats, the Salesforce model. But right now they are spending a lot on product innovation. And they're also spending a lot of money on marketing because they are attracting so many new customers and they're getting a huge return and a quick return on these customers that they're attracting. So right now their margins are pretty much close to zero. Their net income margin, I think, was 1% last quarter. They generated like $11 million in earnings. But if you look at the potential leverage as they slow down marketing and you get more scale on your product development and that 60% gross margin, I think 20% Profit margin is pretty doable at a good enough scale for this company. I think they could get there today if they wanted to, just by maintaining their existing systems and slowing down customer acquisition spend from marketing, because they do spend a ton of money on marketing, which I think is a good thing. So the way I look at it is, okay, well, if you have $3 billion in revenue and a 20% profit margin, which isn't there today, but I think can be there with by 2030, that's $600 million in earnings versus a market cap below $4 billion today. That's a PE ratio close to 5, maybe it's like 7. That's I think very, very cheap for a company growing this quickly. It has 3-year revenue CAGR of 38%, 5-year revenue CAGR of 58%. Pretty darn good. Now, Wise, a little bit different, where they are trading at, and some of it can be confusing because we're looking at British pounds, but just think of it, fairly close transfer to US dollars. They're at a market cap of 10 billion pounds. They do, as I mentioned, 1.6 billion in revenue. So if we think about their potential earnings power, and they are more profitable than Remitly today, but if we think on the whole, their unit economics and costs should be similar. They have very similar levels in revenue, but one trades at a market cap of 10 billion versus a market cap of 4 billion. And Wise is a great business. I think investors will do well owning this thing over the long term, probably significantly better earlier this year or in late 2024 when the stock was at 6 British pounds versus 10 today, but still a little expensive, but not too bad.
No, that's pretty good analysis. All right. So is there anything else about either one of these companies you feel like investors should know that we haven't touched on?
So I'll speak on product development, I think, as the last one. And this is where, again, Wise today has more services for, say wealthier international customers or people that want to spend money, save money, or businesses. For example, my podcast, we use Wise since we have some international payouts we have to do, and the fees are cheap, cheaper than PayPal, and they're pretty easy to do. The problem is they have been a bit stagnant in adding new products. For example, we can't get a spending card with them. It just hasn't been improved. So maybe they need more payout, or sorry, more product spending could be helpful. Maybe they need to reinvest in adding new services for the platform. But with Remitly, and they have to execute first. They've been kind of hyping it up. They've been making a lot of these new products that are about to launch, I believe, in September for customers. Some they've already launched, but they've re-enhanced their platform for small and micro businesses to try to compete more with Wise there, because that is a huge market for sending money. For example, if you have a developer or some sort of worker in Asia, some other country, and you're paying money to, pay out their salary. They're also adding things such as the Remitly wallet, which is going to be similar to the Wise savings account. It's more of the storing money and not just sending money. And they're actually adding some new services such as, and I like the moniker here, send now, pay later, where for an extra fee or maybe a little bit of a loan, if you are short on cash and maybe you're getting your paycheck later, but someone that you want to send money to needs the money now, you can get the money to them much, much quicker, and you have a bridging funding of that. So they're adding all these new services. They're trying to build and expand more from just sending to all sorts of financial services for individuals and small businesses. And that's the overlap where over time, and I think both players can win. It's a large market. It's not going to be a winner takes all scenario, but over time, Wise and Remitly are going to try to copy each other's products. I wouldn't be surprised if a Remitly debit card shows up, especially with that existing relationship with Visa. And I think both companies have a lot more potential to upsell their customers on new services over time. There's, for example, my small business. We want more products from Wise because we use them all the time. And I think we're not the only one out there. There's plenty of other people.
Yeah, for sure. And what is that saying? Imitation is the highest form of flattery.
Exactly. Everyone wants to copy Wise, and I don't blame them. They have the cheapest costs.
Yep, they do. They do. All right. So lots of great knowledge you dropped again today, as always. Where can people find more about what you have going on elsewhere?
All right, yeah, if you want detailed analysis on Remitly in written form, I do have that over at our newsletter called Chit Chat Stocks. I also have a podcast called Chit Chat Stocks that you can find on YouTube, Spotify, or Apple Podcasts. Follow it there. We do coverage on companies such as Remitly, Wise, all sorts of stuff, interviews, covering super investors, and we have 2 episodes a week. So if you like this show, I think you'll like it as well. We try to help investors learn and get better.
Yep, it's well worth your time. It's one of my favorite episodes to listen to every week. They have two shows and they have lots of great interviews and lots of great discussions about stocks, which there is not a lot of out there on the podcast world. And they're one of the few that do it and they do it really well. So it's definitely worth your time. Highly recommend it. So with that, we'll go ahead and sign us off. You guys go out there and invest with a margin of safety. Emphasis on the safety. Have a great week and we'll talk to you all next week.